Are you struggling with money? When somebody starts talking about a financial future, do your eyes kind of glaze over? Well, we're going to give you some simple, doable things today with a focus on insurance. Life insurance, health insurance, homeowners, auto. What about disability, long-term care? How do we get what we need? Where do we even start? That's what today's guest is going to help us with. I'd suggest getting ready to take some notes. Thank you for joining us for Focus. I'm Anna Marie de la Vega. Our guest expert is Paris Jackson, financial advisor with Northwestern Mutual. Welcome back, Paris.
Hey, Anna. Thank you. Thank you so much for having me.
So you're probably used to dealing with all of those things, financial future, eyeballs glazing over, things like that, right?
Yes, ma'am.
With your clients. Just for those who may not have heard our previous programs, would you let our listeners know what you're able to help people with right off the start? And then we'll kind of roll into insurances.
So I am able to assist clients with budgeting, debt planning, life insurance, disability insurance, long-term care, investing, and retirement planning.
And even just to get started, because I think some people are like, I don't have any money. I have no way to get started. And so you go from the ground up.
Yes, ma'am.
With people to get them where they have something even to leave behind, to leave a legacy.
Yes, I do.
All right. So that's who we're dealing with today, and that's who you're going to be getting your expert advice from. So I guess, first of all, insurance. We have to have some that's required by law.
Mm-hmm.
What do we need? We've got life and health and auto insurance and homeowners. Is that enough? Is that cool?
It's not in the way. and
I knew you were going to say
this
that.
is all definitely with respect to a budget. But the way that I think about insurance is if there's something that needs to be replaced, can I replace it with the money that I have saved? I.e., if something happens to my car, is it better for me to pay, $50 to $100 a month for car insurance or replace the $40,000 vehicle? If my house catches on fire and my home is worth, $500,000, $600,000, can I afford to replace that on my own? Or do I make sure that I have insurance that will cover those things? Because we never know when life is going to happen. Mm-hmm. And so insurance is our default to make sure that our families are okay at the end of the day.
So I like how you put that. It's like if something happens to my car, if I don't have the money in the bank, then that $50, $60, whatever car insurance a month is way less than the $300 or $400 a month for a new car,
right? Or
even a new used car,
right?
Okay, so that's a good way to look at it. It's like kind of like you can't afford not to take care of it.
And even if you do, why do we want to deplete our accounts? If I've worked hard to save $50,000 or $60,000, it takes a long time to do that. So for me, it's still worth it to have the insurance to cover the what ifs, because multiple things happen at the same time. And I'll just give you a personal story real quick. A month and a half ago, my car went out. My daughter got into a car accident and got T-boned. And so I was in a situation where we had to replace two vehicles at the same time.
Oh, wow.
I had maxed out insurance on both of them. And so I was able to get some money back from my daughter's vehicle. My car was, my baby was old, but still, because I've been saving, I was able to get both of the vehicles at the same time to make sure that we could keep moving. But insurance was definitely a lifesaver because her vehicle was not old. And if we hadn't had it, then that would have been the cost of the loan that we still had to pay, plus getting her a new vehicle. So
Whoa.
Definitely worth it.
Okay, what do you mean you had maxed out the car insurance?
So car insurance comes with a lot of options. You can get, collision coverage. You can have ACV, what's called actual cash value. You can get 20% over the cash value if you pay for that as a part of your insurance. Having options like being able to get a rental car if you get into an accident, the rental car usually is about 50 days, depending on which company you go through. Mm-hmm. But just having options so that your life doesn't stop. Because if you get into a vehicle accident, you still have to get to work. You still have to go get groceries and take your kids places. And so if you don't have those types of coverages within your insurance plan, then maybe you have another vehicle at home, maybe you don't. But for us, we're like a big moving family. And so it was easy for my daughter the very next day to go in and get her a rental vehicle.
Wow. And you gave is it okay to say that tip on the air that you said about when you're going to get a car, if you're going car shopping?
Yeah, so car shopping. Yeah, car shopping, the most advantageous time for customers is the last 3 days of the month. Car insurance companies, just like anybody else, has quotas that they have to meet. They're trying to sell vehicles.
Oh, the car dealerships.
There are times when it's beneficial for you to go to the dealership so that you can get the best deal or negotiate with the dealership on what the price will be. Now, of course, credit and all of those things apply, but the last few days of the month is the best time, and also when the newer model vehicles are coming out. So the 2026 vehicles, some have landed at dealerships, and so you can get a better deal on a new 2025 because they need to make room on the lot for the newer vehicles.
Do you haggle? Are you a haggler when you go to make a car deal?
I'm not a haggler, but I do ask questions, and I do look for fairness with anything that I purchase.
Really? Like, what do you mean ask questions? Is there any wiggle room on this or that? Or
Yeah, so we ask if there's any wiggle room. What are they willing to sell the vehicle for? Are there any other discounts? A lot of dealerships at the end of the month, they'll have military discounts. They'll have certain APRs that are available for decent credit. It doesn't even have to be excellent. As long as you have decent credit, they'll be able to finance you to get the vehicle off of the lot. So yeah, there's just a lot of questions that you can ask and identify if there's anything special that's going on that helps them move the car off the lot and into the customer's hand.
oh, that's great. So that's a win-win for everybody.
Yeah.
That's great. Great to know. So that's car insurance, life insurance, health insurance. We got to have health insurance. It gets very, very expensive.
It does.
And as you get older, it gets more expensive.
It does.
What do you tell your clients who you help with their finances?
I always tell people when it comes to insurance, it does, for me, the younger, the better. Start establishing things that will be really, really crucial to you when you're older, when you have the ability, when you're younger. You're not as young and healthy as you are right now. Some people, over time improve their health, but at the gist of it, most people when they're 18, 19, 20 years old, you're at your healthiest. And so while, insurance in the beginning, we try to do what's affordable. As your pay increases, as your job and lifestyle gives you the ability to afford it, and you're healthy, start looking at those things with a fine-tooth comb and make sure that you have all of the components that you need, not for just right now, but for in the future.
Because then the rates will be higher if you try and add on some more insurance as you're older.
Yes.
And actually, you just made me think. So like at this point right now, possibly as an adult, you're the youngest you'll ever be, and you're possibly the healthiest you'll ever be. So you just, like at any point, you need to do the best you can. Right.
Because we never know when it's going to change. And I'll tell you, I think we've had this conversation before, Anna Marie. There are multiple people, majority, I would even say, that when they get to that older stage in life, the wish factor comes in. I wish I would have done this, or I wish I would have done that. And I find a large amount of people talking to their children about these things like, hey, you need to do this because I didn't when I was younger, and this is how it's affected me. And so I think there's so many people that we can learn from. It's definitely a balancing act of understanding what you need versus what your budget can afford. And that's truly the importance of working with a financial advisor.
Yes, I agree with you wholeheartedly. So auto insurance, you want to kind of max that out if you can.
If you can.
Get all the things that will help you not have a major disruption in your life if your car has a major disruption. Homeowners insurance. You just want the basics on that. How do you know what you need to get for homeowners insurance? You kind of touched on that, but
yeah. So this is definitely not my expertise level, but I do know, a little bit of things that you definitely need to consider. One of the things that people should look at is flood or earthquake insurance because it's not automatically included in most standard policies. Looking at things such as what will the insurance company pay me if my house is completely gone? Do I have things or features such as being a hotel being paid for while my house is being repaired? What is my deductible? The higher the deductible typically equals a lower monthly premium. And a lot of people go for that, but you want to make sure as a part of your emergency fund that you have that deductible ready and available, and you're not scrambling to try to find it at the last minute.
Whoa.
And so to me, it takes an annual review of your policy, understanding whether or not you're in a flood zone or, you have high weather events and what those things cost. or what's not automatically included inside of that policy, and just taking the time to speak with an agent to make sure that you're covered for all the potential things that could arise with your home.
And it varies state by state and sometimes neighborhood by neighborhood.
It does, yeah.
Okay, so an annual review is kind of a big number one factor.
Yes.
To see what might need to be covered. Let's see. So we've got auto, we have home, we have life, and we have health. I know as we get older, in some cases, the health insurance premiums start going up. Life insurance premiums start going up. Okay. So when they start going up, is there ever a point where you go, I'm putting this much? I looked at a policy that my husband had for years and years and years, a life insurance policy, I think it was. And it said he had put $22,000 in it over the course of his life, which is not a lot. And it's not near the face value of the policy. So it's great. However, is there a point where you go, I really should take a bunch of this money that I'm investing in this, and this, life insurance, for example, perhaps, and should I put it elsewhere or should I invest it elsewhere? How do you know? Do you have to do an annual review on those things as well?
Yes, it's an annual review and sometimes semi-annual depending on the person's income and lifestyle. And the barometer for me, definitely not a one-size-fits-all situation, but we're looking at how much debt that you have, what needs to be covered if you did not make it home that night, what would you be leaving your family with, and is that life insurance enough to cover that? With respect to rising costs, there are definitely certain types of policies that you can get. Most of the time when someone is younger, they're going to get a policy that has the increase in premium because it's designed to fit your budget and increase over time. But you can meet with a financial advisor or a licensed insurance agent to ensure that maybe I need to get something called a level policy. And that level policy has premiums that do not change, but the time period is usually shorter. So 10-year, 20-year, 30-year versus the one with the increase in premium typically lasts until age 80.
Okay. Do all life insurance policies eventually end?
So term life insurance policy has an expiration date. So again, it depends on the type that you have. Usually the increasing policies end at age 80. A 10-year will go from whenever you purchase it through that 10-year period. And the longest that I've seen available is a 30-year term. And so outside of a term policy, the one that you get that lasts as long as you pay the premiums is a whole life policy.
Do they go up as you get older?
No, typically no, but it depends on the kind. A basic whole life policy, once the premium is set, that's the premium you're paying for the life of the policy. But you do have some that are structured where they're a part of an investment portfolio, and those can have some fluctuations within it. But other than that, if you just get a basic permanent life insurance policy, it doesn't change.
And the reason for term, if you're just joining us, we're talking with Paris Jackson, financial advisor with Northwestern Mutual. The reason the term, from what I understand, is like if in 30 years you're still alive, in theory, you're going to have some money saved up.
Right.
You should be able to pay for your burial or your cremation or whatever you're going to do. Is that kind of the thought with term insurance?
In theory, right. In theory, term insurance is supposed to be, hey, if I don't make it to an older age and something happens when the part of my life that has the most bills, right? I've just purchased a home. My kids are still in high school. I may have to pay for college. Like my expenses are higher. The higher life insurance policy usually comes in the form of a term because it's cheaper. And so it's like a covering for the things that I've accumulated in life or will accumulate. And then as I get older, I've paid my house down. The kids have moved out and they're on their own. And so my need is not as great. And so life insurance turns into this thing where we're looking at it more as a legacy than it is, leaving a bunch of money to someone. It serves multiple purposes, but I think the important thing is to understand that when you get older, what do you want life insurance to be able to do for you? And that determines how we structure it throughout the course of the relationship. And so when I am working with my clients, it's not just, hey, you get $1 million just because, right? Most of the time that number needs to have a purpose to it. So you have the comfort at night to know if I don't wake up or if I don't make it home, that I have enough money to not leave debt to my family and I can leave legacy.
Legacy meaning maybe some seed money for kids to start their own home purchases or things like that, or
It could be
for charities, or
it could be anything. It could be I leave money as a charity to my church or my favorite organization. It could be I left money so my kids don't have student loan debt. It could be I leave them money for the seed for their, down payment on their first home. Anything that you would consider that would make your generation or your family name better is what you can classify as legacy. And so understanding what's really important to you is a part of developing that life insurance number.
So if I'm like, well, I'm just going to live my own life and spend the money, I just need enough to get me in the ground or get me cremated, then the life insurance needs would be different than if I thought, well, I need this because I need to support this person.
Right. And and it depends. Like some of us have situations where we have a special needs child that we have to consider. Some of us have situations where we actually have a parent that we need to consider that may need, some additional assistance. We have a spouse that may not have had the opportunity to contribute to a retirement plan, and we need to make sure that they have enough left over. And one that I really find, a lot of parents don't want to leave money to their kids, but those grandkids are a different story, right? And they're like, parents, I really, really want to make sure that, because I have 7 grandkids and you don't think about it when you're young, that maybe this is going to be a thing. You're like, the kids are going to be all right. But when you have a grandchild, it's just so different with respect to what you want to be able to do for them, because legacy hits different for some reason for most people when they have a grandchild.
Yeah.
You're really hard on your kids because you want to make sure they do well, but you spoil your grandkids.
Yeah.
And a lot of the older clients that I have, that's what they're looking at, is making sure that they can leave a legacy so that their grandkids can have a different life and not be burdened by some of the things that they were, that person and their child was actually burdened by. So again, legacy means something different to everybody, but sitting down with a person who can help you think through what life insurance actually means to you can be a game changer regardless of when you pass away.
Okay, I'm writing this down. What does it mean to me? What does the life insurance mean to me? Have a review, talk to a financial advisor or a licensed insurance agent and say, here's what I want this money to serve.
Yes.
Here's, what is it? You gave here's where I want these little soldiers to go. You said give them a mission or something like that.
Give your money an assignment.
Yes.
Yeah.
Yes.
And life insurance is a form of money, right? I may not physically have it in my hand, but I still need to give it an assignment. And I know we're talking about insurances today, but we give that money an assignment through either a will or a trust, right? And so we want to make sure that we're not just having that money in place, but what happens to it when I'm no longer here?
Yeah.
Is it going to be able to do what I want it to do for those people that I'm leaving it to?
Okay. So I want two things, a will and a trust, kind of talk the difference there. I was talking to a friend the other day, and he said, well, so if you have life insurance and you die and your spouse is your beneficiary, don't they just get that money? Do you have to have a will? Do you have to have a trust? Do you just make sure you have the beneficiaries updated on your life insurance? What's the difference in that?
And so the beneficiaries, for simple situations where one spouse passes away, other spouses listed as beneficiary, there's typically no issues, right? It just goes to that person. But what happens if both of them pass away at the same time? The intent may have been for all of that money to go to the spouse, but if both spouses are no longer here,
right,
then I have a $500,000 life insurance policy. Who does it go to? Does that person have kids? Did they want, a charity to receive any funds? And so it's more than looking at just the dollar amount. But if I'm leaving it to somebody under the age of 18, then I definitely need some type of barrier to ensure that there's not somebody in the middle that's going to take hold of that money and do the opposite of what I wanted to do for my child. And so I have, we have kids under the age of 18. And so for them, a trust needs to be in place to guard their money because they're not old enough to make those decisions. But for the ones that are over 18, a will could suffice because we just list them as a beneficiary. And so while I'm not an expert on wills and trusts, I definitely have connections to estate planning attorneys that can better serve my clients to meet their needs because, again, everybody's situation is different.
Okay, so estate planners, basically.
Yes.
I'm writing this down, too. Because you're right. Everybody's situation is different. They may have a kid under 18 or not. Or they may have somebody that, I don't want to think how to say this. sometimes when someone passes away in a family, people who've not communicated with that person for a long time, haven't shown any love, any interest in that person for a long time, kind of come out of the woodwork and go, well, I'm his distant cousin so-and-so, and I need some of that money or whatever. So it's also to protect the reason you're leaving that money as a legacy.
Protecting the legacy, yes.
Okay, protecting the legacy. All right. Is there a way to know, would an estate planner or a financial advisor, who would be the one to help us know to look at all of the, like, we're paying all of this for life, all of this for health, da-da-da-da. Is there somebody who can kind of look at all of that and go, okay, this is exorbitant. Okay, this is cheap. You're doing right on here. Who would we go to?
And so I think the central person for all of that is the financial advisor. And then you can branch off based off of what that individual has going on. So if I have a family that has a kid who's over the age of 18, but may have the ability to not take care of themselves on their own, then I connect myself with that estate planning attorney and any lawyers or what have you. Like, we develop groups within an ecosystem to assist our clients. Sometimes there are other people that we have to bring to the table, maybe a realtor or, different types of attorneys. So it's not a one size fits all with respect to what a financial advisor is able to do, but they can bring the right people to the table because they usually hold the licenses for the products that are going to facilitate the conversation for the estate planning attorney or for the lawyer or for the realtor.
And I noticed that with our personal situation, we were talking about doing a trust for our special needs adult son, but we need a trustee, a fiduciary, right? And a fiduciary means that what does that mean exactly?
It means they have the legal responsibility. Even though we're all fiduciaries as financial advisors, you just have the legal responsibility to be prudent and make the best decision on behalf of the client and not yourself.
Okay, that makes sense. And so apparently when you get with the financial advisor, they kind of know these people. Well, I know so-and-so who does that, or so-and-so who helps put that all together. These are things that would benefit you to have a financial advisor, whether it's Paris Jackson or someone else, because they have their groups of people that they can help turn you on to and point you to. They have their resources that they can help you get to, correct?
Correct. And we're not typically advised to give one particular name. Like, we give people a few resources that they can kind of research on their own to find who they would rather work with, not who we choose for them to work with. And so I personally have meetings with different realtors, so I know, I can have a group that I can send a client to, or a group of estate planning attorneys versus one individual, because, certain people take to certain people, and I want to make sure that the client is definitely served in the best manner possible.
And the realtor, why would you have a realtor on board? And if you're doing your estate planning, why would one want to do that?
So for me, a realtor is on board if someone has multiple properties, investment properties. The estate planning attorney will know by law what to do, but maybe I need to sell a home, or maybe I need to, do a quick claim deed, something. A lot of times the realtor is just on the back end if there's any transactions that need to happen. Most of the time, realtors connect with me and my clients if someone is in the process of buying a home more so than estate planning, but they can all kind of intertwine depending on what that person's lifestyle is. Am I just married? Do I have kids? Am I a single parent? And then I may need to sit down with all three as we're going through the process.
Okay. How did you, as a financial advisor, I'm asking a personal question, but also a business question, become so collaborative with other people? I notice a lot of times businesses I don't like to tell my secrets. I don't like to work with other people. I'm going to try and get as big a piece of the pie as I can. Why did you become so collaborative?
You can't do this on your own. It's absolutely impossible. And if you're doing it for the right reasons to serve the client, you have to have the best people on your team. You like to think of it as a boardroom with people sitting at the table. When the client walks in, they need to be able to have all the resources that turn their life on and make it run as efficiently as possible.
I like that.
If you have a car, you don't just have the engine inside the car, right? You have all the wiring, you have the seats, you have the air conditioning, the heater. So you need a team regardless of what you're doing. And finances is just one of those major areas where it's just not the financial advisor because they can't serve you in every area. They're not licensed in every area. And if you care about the individual, then you have to have people around you that can support them for different things in their life.
If you're just joining us, I'm Anna Marie, and this is Focus. We're talking with financial Paris. We're talking with financial advisor Paris Jackson with Northwestern Mutual. And as you said that you need a team, I think a lot of people feel shame about not having their finances together or about getting to this point in my life and I don't have this and I don't have that or I haven't done this or that. But I feel like what you just said hopefully registered with some people as a reason to not feel ashamed, because it's hard getting your finances all together, making sure you got all your basic. You weren't born knowing it.
Right.
You weren't trained to know it, but you can get hooked up with somebody who can help you get with people who have been trained.
Yeah. And it's the same thing. Like if you go to the doctor and you go to, a general surgeon and they're saying, hey, these are the things that I see, but I am not specialized in hearts, or I'm not specialized in podiatry or any other type of area. And so they send you to a specialist to make sure that you're taken care of. It doesn't diminish anything about that doctor. They're still there to serve you, but they know what their capacity is. They know what they've trained for. And so bringing in other people is due to ensuring the overall health and well-being of the person that has come in for service. It's the same thing with dealing with a financial advisor. It doesn't have to be an estate planning attorney. It could be later on in that journey, but maybe your focus is ensuring tax efficiencies and I need a CPA or there's so many things that kind of branch out with finances that you just have to have experts available to assist your clients.
And the client themselves.
Yeah.
We've been trying to do our own heart surgery.
Yeah.
We've been trying to make this whole car run all by myself with no extra parts.
Yeah.
So you don't have to do that these days.
You don't have to do it. And I think fear, I was talking to one of my clients on the way in and she said, when I first met you, I was scared to have this conversation because it required me to be exposed. It required me to tell you about all the mistakes that I've made. And I told her, I said, we all make them. But the difference is that you have somebody that can help talk you through those things and that you're willing to listen to the advice and not, even sit down with me and still try to do it all on your own.
Yes.
It's coming to the table is the courageous part, because we've all made mistakes and there's not any judgment on what you've done. It's, hey, what are we going to do to move forward to make your life a little bit better? And so I would tell you, I think we've talked about this before. Fear is a natural response to sitting down with a financial advisor. Anxiety levels go up in the first few meetings because you're like, man, I'm waiting to hear what he or she is going to tell me about the things that I've done and where I am. And that, it can cause a lot of strain, but I think
a lot of shame.
Yeah, but the healthier thing, right? We like to talk about this with respect to going to the doctor. Do I know that I'm sick and then just stay in the house? Or do I go to the doctor and say, hey, what can you give me to make this better? What are the things that I need to change? And so that's how we look at it with a financial advisor. I know I'm scared. I know that I may not have made the best decisions, but is there something that I can do to make this better? And 9 times out of 10, the answer is yes.
We're almost out of time, and I think we should end it there, Dr. Jackson. Any final thoughts that you want to add?
If you are somebody who's hesitant, ever been hesitant, I believe that I'm the perfect person to get you started.
Yeah.
If I am not the right person in the end, I will definitely get you to somebody who better suits you. But just take the time to ask any questions that you may have. It could be as simple as budgeting, right? You may not be to the point where you want to talk about retirement planning because, hey, I just have to get my money in order. And so have the courage to come and say, I need help, because it is a game changer and a life changer for so many people.
Thank you. Paris Jackson, financial advisor with Northwestern Mutual. We're going to put some information and some links on our Focus Facebook pages as well, so you can get in touch with her. Thank you for joining us this week. Make sure you listen again next week. I'm Anna Marie, and that's Focus.